Okay, welcome everybody. Let's get started. I'm very pleased to be able to offer this public webinar about individual disability insurance. It's the one chink in people's armor they often overlook when they're self-employed. What happens to you if you can't work and you have no income? It's super important. I'm very pleased to turn this over to Stacy Brin, who will be facilitating the workshop. I'm double booked, so I'm going to be dropping off in a minute. But Stacy's going to be leading with our guest, Ryan Scott of Scott Wealth Planning. In addition to the content of today's webinar, I wanted to mention two quick things. One, we have some guests in today's webinar. Welcome. A little bit about PICA. PICA was founded by three self-employed independent consultants about 5 or 6 years ago, when we realized there was no single place to go to get help with launching and setting up and growing your own independent consulting business. So we walked in your shoes, and that's why we created PICA, which is essentially an educational organization and community to help people like you live the career of your dreams. So that's what PICA is all about. There'll be more information at the end about how and why to join PICA. I also want to mention, though, a little preview that Ryan has arranged for a 10% discount on disability insurance for PICA members. So if you've been on the fence about joining PICA, that just might be the push that you need. So with that, Stacy, I'm going to turn it over to you and let you guys take it away from here.
All right. Thanks so much, Liz.
Thanks for doing this.
Absolutely. Well, welcome, everyone. I know some of us are PICA members and others are guests. So this gives you a sneak peek of the value that you get from the PICA community. We usually have introductions during the session, but we have a large crowd and a lot of information to cover. So I'd like to ask if, instead of our usual introductions, you just share in the chat your name, where you're joining us from today, as well as your consulting niche. And then we can share and learn who's here. So before I pass things off to our guest speaker today, there are a couple housekeeping items. So we do encourage you to please participate today freely, and we encourage you to use your webcam so we can see your lovely faces. Also, please monitor your background noise. So if you are not speaking, please put yourself on mute until you need to speak. Feel free to type any questions or comments in the chat box. And you're also welcome to use the anonymous Q&A feature of Zoom. You can feel free to raise your virtual hand or your physical hand to ask a question. The flow today is going to be for Ryan to present for about 40 minutes. And then at the end, he'll open it up for a formal Q&A for about 15 minutes. And as Liz said, we are recording this session, but afterwards we'll send out the slides as well as a link to the recording, so you've got this information handy after the session. So at this point, I'd like to introduce to you our featured guest speaker today, Ryan Scott. He is the founder of Scott Wealth Planning. He handles planning for individuals, families, business owners, executives, and solopreneurs like you and I. He handles qualified plans, including 401ks and 403b plans, as well as non-qualified plans and defined benefit plans. He's got a bachelor's in finance, as well as a master's of science in personal financial planning. Ryan has multiple certifications, all of which I could not fit on this slide, but you are welcome to check out his LinkedIn profile or his business website, which are here on the slide. And again, these slides will be shared after the meeting. So without much further ado, I am going to stop sharing, Ryan, so that you can share your slides and get into the meat of today's talk.
Excellent. Thank you, Stacy, and pleased to be here with everyone today. I appreciate your time. Good afternoon, good morning, depending on your location. I was just monitoring the chat and see some familiar locations. I'm based in the Minneapolis, Minnesota area, but used to be in the San Francisco Bay Area of California and Seattle prior to that. So some familiar locations. So today's discussion today is about income protection, also known as disability insurance. And I fully recognize that it's not the most exciting topic, but it is an important one for personal financial planning. And so I wanted to go over the need for this coverage, how it works, and how you can apply for the coverage. Please interrupt me at any time with questions, comments. I'm happy to present for 40 minutes, but if we can have some dialogue going, that would be great. I am going to share my screen today with some materials with you. But I just wanted to mention that disability insurance is important, but it's a rare piece of a financial plan. And studies suggest that the most common reason why an American does not own disability insurance is because no one asked them to apply for it. And so many people recognize the need for income protection, but aren't sure how to go about it. And a financial advisor or insurance agent never brought it to their attention. I also recognize that many of the Americans that do have disability insurance, they have it through a group plan through an employer, but many solopreneurs or small business owners don't have a plan like that, and they don't seek the coverage out on their own. So I was hoping to educate you about that today. So where I'd like to start is just one page of a PDF, and then I'll get into my slides. But I think this is a simple example for income protection. And I want to crack a quick joke here. You are all world-class consultants, and I think the disability insurance industry needs some consulting, because disability insurance is called disability insurance, but life insurance is not called death insurance. So if you could think of it as income protection and not disability insurance, it might provide more clarity for you. So with that said, I'm going to share my screen for a PDF for a moment. Stacy, if you could give me a head nod if you can see my screen. Okay, perfect. So everyone needs a plan B. And the idea of this is, in very general terms, if you were offered two jobs, and job A, you make $100,000 a year, but if you become sick or hurt, you get $0. And job B, if you made $98,600 a year, and if you got sick or hurt, you got $60,000 tax-free, which job would you choose? Many people will lean towards plan B, and they're willing to give up a little bit of their 100,000 to ensure that they get 60,000 if they get sick or hurt. At a very basic level, that is income protection insurance, also known as disability insurance. And those premiums quoted, the $1,400, that's going to be different for everyone. Some people it'll be more, some people it'll be less, depending on their age and the benefit amount. But it's just an example of, if you could have job A or job B, which one would you choose? If you choose job B, then that means you're willing to take action on disability insurance. So I will just keep going. Stacy's monitoring the chat and people raising their hands. Go ahead and interrupt at any time. I'm going to stop sharing for a moment and bring up my PowerPoint, and we will hop into the presentation. Okay. Stacy, one more head nod, please, if you can see the home screen. Perfect. Okay. So here is the topic for today. And let me rearrange my screens here real quick. Okay. So disclosures, you can read that real fast and I'll move on. So is your income protected? So from a financial planning standpoint, if you look at savings for short-term and retirement, and you look at auto and home insurance, and you look at planning for the future, you could argue that disability insurance is the foundation of a financial plan, because your income is funding everything above on this chart. And if you didn't have your income anymore, you might struggle to be able to fund other aspects of your overall financial plan. I do want to mention that, like all insurance, disability insurance has a lot of details about how the policies work, how they pay claims, etc. I will cover as much of that as I can. What I'm hoping to do here in the beginning is to allow you to understand the need. And probably everyone on the call owns renter's insurance or home insurance and auto insurance. And you probably don't know every detail of those, but you understand the need or the requirement to have that coverage. So I'm starting with the need. So as we look at what are your assets, you think about your business, your home, your investment accounts, your 401k. Many people overlook the value of their income. So on this slide, and as an example of a 35-year-old making $75,000 a year, in the fine print, it assumes 5% annual salary increases between ages 35 and 65. But with those assumptions, their earning potential is actually $5 million. So if this 35-year-old compares that asset to their house or their car or their retirement account, this is probably their largest asset. And if they lost their ability to earn an income and they don't have disability insurance, then that asset is not insured. So people often ask, okay, well, what could be a disability? And people say, I don't want disability insurance. I'm not going to get hit by a bus. Injuries are a small percentage of disability insurance claims. What's most common is an illness. And the data suggests that 1 in 4 of today's 20-year-olds will experience a disability in their career, whether it's short or long term. And so when I hear the I won't get hit by a bus thing, it's like, yeah, but how many people do we know that have an illness or a disease or cancer that keeps them from work either temporarily or permanently? And then take that a step further, when they were out of work, did they have any sort of disability insurance? If not, probably a lot of financial stress in their situation. So this chart here, I like to think of it as the it won't happen to me. And the get hit by a bus thing could fall within injuries, which are 10% or less of disability claims. And the most common is actually musculoskeletal and connective tissue disorders. And then also nervous system and mental and nervous disorders and substance abuse. And as we go down the list, injuries are the second to last. And so as you think of your occupation, you might think if you had a broken arm or a broken leg or back problems or finger problems, and you couldn't type or you couldn't make phone calls or you couldn't host presentations, that would have an impact. But what would possibly have a bigger impact are those illnesses and diseases that many people don't think of that would keep them out of work. So I just wanted to address the it won't happen to me thing. And if 1 in 4 20-year-olds will have some sort of disability claim in their career, then the data suggests that this is important. And I compare this a lot to life insurance. Many more Americans own life insurance than disability insurance, but we're 3 times more likely to be disabled than we are to pass away prematurely. So I'm not discounting the need for life insurance. I'm just adding to it that in that life insurance conversation, disability insurance should be included because of the higher likelihood of a disability than passing away. So as you think of your financial planning checklist, I know this is very basic, maybe you're further in your career than these checkpoints, but it should be the 7th checkpoint here should be included in a preliminary financial planning conversation, right in line with building up savings, having life insurance, paying off student debt, et cetera. And as we progress through our careers and our family situation becomes more dynamic, yes, that is an important time to discuss disability insurance, but I'm just saying that hopefully you have that conversation sooner than later as a basic need for a financial plan. So how would you cover expenses? So let's say that you had a disability, but you don't have any coverage. So looking at savings, significant others income, Social Security, disability, or taking out a loan, how long would those sources last? So as part of financial planning, many people say that you should have 3 to 12 months of expenses or income and savings for emergencies and opportunities. And so that would probably last 3 to 12 months. So if your disability lasted longer than that, that would not be sufficient. Relying on a partner's income. So many people, while they're healthy, rely on a partner's income if they're a single or dual income household. So if the disability happens, you're still relying on that, but there's not any extra income. And if it's a dual income household, you actually have less income. So that's not a sufficient strategy. Social Security disability, what I'd like to mention here is that the definition of disability for Social Security is you cannot perform the duties of any job. Whereas individual disability insurance, the definition is you cannot perform the material and substantial duties of your job, even if you could do a different job. And then the last one, taking out a loan or credit cards, that could provide immediate cash for you, but then those payments could add up and add to more debt. So the premiums for disability insurance need to fit within your budget, but if you can afford that and implement it, it's a much better strategy than these 4 bullet points here. So how income protection works. I just left this in here. I'm not going to show this. This is a 1-minute video that I'll share with Stacy and Liz. And it's just a quick summary of the key points I'm making today. So you guys can save that link, but I'm not going to show the video at this time. So it provides for the little things, big and little. So disability insurance provides a portion of your income if you become sick or hurt, and that's intentional. Most policies provide up to 60% of your income if you're sick or hurt. The reason for that is the disability insurance companies never want you to be incentivized to become disabled. So they're not going to offer close to or more than 100% of your income, or people would be incentivized to become disabled. So up to 60%. Now that 60% is tax-free with the policies that I'm talking about today. So on an after-tax basis, depending on your income bracket, then that could be quite a bit more than 60% if you gross that up to take into account taxes. So as you look at this, you probably have insurance on your home, your vehicle, your cell phone, and other recreational vehicles that you have. Why not have insurance on your income? Next is the impact of a disability. So what we look at here is income, savings, and expenses. And while you're working, they're in that order. But if you become disabled, income goes down and expenses go up. And if you don't have coverage in place, that can increase debt. So again, I'm just trying to illustrate the need for the coverage. And some of the things to think about is not only could expenses go up related to medical expenses, but also your regular expenses will continue. Those do not go away. So Principal is one of many carriers that I work with for disability insurance. Principal has a very strong product from a pricing and benefit standpoint. And Principal is who came to the table to offer the 10% discount to PICA community members. And I'll go over the details about the discount during my presentation today. But with Principal's disability insurance, so the coverage protects your income if you get sick or hurt up to 60% of the amount that you make pre-disability. With the discount from PICA, once you have it, you can never lose it, even if you discontinue your PICA membership in the future. You just need to be a PICA member at the time of application to qualify for the discount. Your policy cannot be canceled or changed as long as you pay premiums. We refer to that as non-cancelable, guaranteed renewable, which means as long as you pay your premiums, everything is level. Your premiums remain level, your benefit remains level. There are policies in the marketplace that are cancelable and are annually renewable. I'm not a big fan of those policies, and so I'm not representing those today. And then second is that you can keep the policy even if you change your career. So not only if you have the discount, you keep that no matter what, but also if you change professions, occupations, careers, or join an employer, you can also keep the policy. So whatever your occupation is today, that does not dictate whether or not you can keep your policy in the future. And then also in the future, if you have group coverage through an employer, or you pick up some sort of other association discount, you don't have to cancel this policy. You can actually adjust it, and it's flexible. So when you obtain coverage, you're really locking in your insurability for the rest of your career, regardless of changing jobs or professions. So what you can expect. So as I mentioned, these policies can become complicated from a detail standpoint. And what I want to let everyone know is that if you're interested in this coverage, the policy can be customized for exactly what you'd like. And I'll go over what that customization looks like. Also, not only if you have a change in occupation, but also a change in health. So you only need to be insurable at the time of application. And once your policy is in force, it cannot be canceled or changed, even if you have changes in your health, even if you don't have a disability. So when you apply is when you need to be insurable. But after that, you can keep your policy regardless of any changes in your health. And then last, the benefit periods are available actually in 5 benefit periods. There's a 2-year benefit period, a 5-year benefit period, to age 65, to age 67, or to age 70. So that's a preview of some of the customization that's available. So coverage that keeps with you and your lifestyle. So with Principal, you actually have the ability to increase your coverage in the future without any medical underwriting. You would just need to prove that you've had an increase in your income. So I mentioned a few minutes ago that you're locking in your insurability for the rest of your career. And that includes if your career advances and or you have more income, your policy can actually keep up with you and you can increase the benefit. Now that would increase the future premiums proportionately. However, you would not have to go through medical underwriting. So even if you've had changes in your health, once your policy is in force, you still have the ability to increase it in the future. And of the clients that I work with, that's been very beneficial. As their career advances, their policy is able to keep up with it. Okay, next I just want to give a quick overview that in addition to individual disability insurance, Principal does have disability retirement security as a product, which is the DI retirement security on the bottom left of the slide. And so the top is disability income. And if you get sick or hurt while you're working prior to the expiration of the age I mentioned, 65, 67, 70, your benefits will pay until you achieve that age. Separately, if you add on the disability retirement security policy, that income or those benefits would actually start after you retire. And the idea there is that while you're sick or hurt on disability claim, you're probably not saving for retirement. And so if you got disabled 20 years before retirement, you're probably missing out on 20 years of retirement savings and the compound interest. So this policy is designed to make up for that. So disability income pays you a monthly benefit to ensure your income. This one is to ensure your retirement savings.
Ryan, I wasn't sure if you wanted all the questions at the end. There was one in the chat.
Yeah, let's do
Okay.
that.
All right. So Nancy asked a good question that I think others may have. Are there any pre-existing conditions that disqualify somebody? I'm assuming if any pre-existing condition would cause higher rates premiums.
That's an excellent question. Thank you for asking it. So there's two ways that pre-existing conditions would be handled. The first would be a rating, and the second would be an exclusion. So a rating would be that they will insure the pre-existing condition, but they're going to increase your premium. They're going to charge you more because of that pre-existing condition, but they will insure it. For example, let's use an easy example. Let's say you have spine problems. With a rating, if you have a pre-existing condition related to the spine, any disabilities related to the spine would be covered, but the rating would increase your premiums. That's the first way. The second is an exclusion. Use the same example of the spine. If you had a pre-existing condition related to the spine, they would exclude any disability claims related to the spine, but they would not increase your premiums for all of the other conditions that could cause a disability. Did that answer your question? So
Yes, thank you.
you're welcome. So when you apply for disability insurance, the underwriters only have one chance to underwrite you, because once your policy is in force, they can't go back and say, oh, we forgot about something. We need to add an exclusion or a rating. So the disability insurance underwriting process is comprehensive. They will look at your medical history, your current lifestyle, your occupational duties. And then the underwriter on a case-by-case basis will determine if there will be any exclusions or ratings. So it's not a streamlined process where everybody gets the same approval. The underwriters look at it on a case-by-case basis for each application that they receive. Okay. So one more slide on disability retirement security. I already mentioned it on the previous slide, but the way it works is the benefits. So, excuse me, if you went out on claim while you're still of working age, so less than the 65, 67, 70, the benefits for disability retirement security would not go directly to you. They'd go into a trust, and then they pay while you're in retirement. So that's how they make up for the lost retirement savings. Okay, so if you want to get started, here would be the steps. So first would be an application with a representative. You have zero obligation to work through me. Unless you want the PICA discount, you would need to work through me for that. But you apply with an insurance agent. And then you answer questions about your lifestyle, health history, occupational duties. That is a confidential interview, and it can be done online or over the phone. And then the underwriter looks at a transcript of your answers to those questions. And then you can receive a quick decision if you're under the age of 50 and qualify for the, I guess, parameters for that program. If you don't qualify for the parameters or you're over the age of 50, you're still eligible for coverage. It'll just be full underwriting and not a, I guess, shortened underwriting process. But once the underwriting team has all of the requirements, You'll receive a decision quickly no matter what. Full underwriting could also include a medical exam, which would be blood, urine, height, weight, blood pressure, and pulse. And then could also include the underwriters ordering doctor's records if there's anything in your medical history transcript that they would like more information on. So as I guide people through the underwriting process, we do one step at a time. I let them know if there's any additional requirements. If there are not any additional requirements, they'll receive a decision pretty quickly. If there are other requirements, I let you know what that is, and we move on to complete those. So how to get started. So determine the need and what is correct for you. So even though you're eligible for up to 60% of your income, not everybody wants or needs that much or can afford that much. So you don't have, it's not all or nothing. You don't have to purchase the full benefit. You can purchase less than the maximum that you qualify for, and then proceed with the application and phone interview. Part of my consulting with people that are interested in this type of coverage is to schedule a one-on-one consultation, ask what you're looking for, ask how this fits within your financial plan, educate you on what your options are so that you can make an informed decision heading into the application process. I did want to let you know that the application process is zero obligation. So if you complete the whole thing and get approved, you still reserve the right to say, no, thank you, I don't want the coverage. And so when you apply for the coverage, your application is simply an application. It's not a contract that you're going to proceed if you're approved. I also want to remind you that insurance is a unilateral contract, not a bilateral contract. The unilateral contract is that if you pay your premiums, the insurance company guarantees that if you qualify for the benefits, they will pay the benefits. However, you are not promising the insurance company that you'll pay your premiums forever. So you always reserve the right to cancel your policy at any time. I also want to mention that these policies are adjustable. So whatever you get approved for and issue day one, you can change that in the future. You can add or remove certain benefits. You can increase or decrease your monthly benefit, etc. And you're not stuck with whatever you purchase. So I am going to show some sample illustrations for the pricing, but my contact information is here. If you reach out to me, no cost for the consultation, zero obligation to apply for anything. And if you request an illustration for the pricing, that is also zero obligation. I'm here to help. And if you choose to proceed, I'll guide you through that underwriting process, but there's no obligation to get a preliminary quote or ask me questions. Before I hop into the sample proposals for the pricing, any questions, comments on any of the slides I just covered?
Ryan, I do see one other good question in the chat.
Okay.
Omalayo asked, what is the income/revenue eligibility threshold for a startup consultant with little or no income so far?
Great question. I'll give you the worst answer ever. It depends. But what it depends on is how long you've been in business. And I understand you're asking about a startup. And then also, if you have a startup business, but you've previously worked in that occupation or profession, the underwriters will consider previous income. No guarantee that they will, but on a case-by-case basis, they will. And then also, there are what are called business owner allowances, where the underwriters will actually bump up the maximum benefit available for business owners, recognizing that business owners are either growing their revenue or they have variable revenue. And so it's a case-by-case basis, but someone with a startup is eligible for coverage. And we would just need to see some sort of proof of current or former income to determine what you're eligible for. Any other questions, comments at this time? Okay, so I'm going to hop into sample proposals just to give you an example of what an illustration would look like if you requested one. And I just want to mention really quickly, many people are familiar with life insurance, and life insurance premiums are less expensive for women and more expensive for men. And that is simply based on claims. Disability insurance is the opposite. It's less expensive for men and more expensive for women. And that's simply based on claims. And so the quotes that I'm going to show here are apples to apples, except one is female rates and one is male rates. And I just wanted to show the difference. It's not to upset anybody. It's just to show you the reality of the pricing for this coverage. So I'm going to share some PDFs again. Stacy, for the third time, I'll ask if you can see my screen? Perfect, thank you. So this is for a female, and this is completely sample. This would be for a female age 40, does not use any tobacco or nicotine products. I'd like to clarify what gender specific means. So this is an illustration that shows the PICA discount of 10%. There are other discounts that Principal has available for W-2 employees that are what are called gender neutral, which means that the male and female rates no longer apply and they use what are called unisex rates. For the 10% discount available to PICA, that's known as an association discount. And when Principal offers association discounts, they still use male and female rates, and then the discount comes off of that. So I just wanted to clarify why this says gender specific, because if you get your own illustration from me, it will also say gender specific, but it will be based on male or female. Occupation class, the higher the number, the lower the risk of that occupation. So 5A is the second highest occupation class, 6A is the highest. If you had a lower occupation class, apples to apples, the premiums would be higher because the underwriters consider that to be a higher risk occupation. This was run this month, and this is for a fictitious female in Kansas. So the way that the illustration works is the benefit is quoted first, $5,200 per month of tax-free benefit from day 91 to age 65, okay? So this is a long-term disability insurance illustration. And the idea is that you either have short-term disability insurance to cover the first 90 days, or you will self-insure with your own checking and savings for the first 90 days. And so the maximum annual benefit would be this number times 12, which would be $62,400 tax-free per year from the first year to age 65 in this example. Now, this quote does have what we call some additional cost optional riders, which I'm going to cover here. I apologize, I moved screens. Okay, so the additional riders I'm going to cover, but I want to let you know what the basic definition is. So before I get to that, let me just let you know this. The definition of disability is you cannot perform the material and substantial duties of your job, and you are not working. That is the basic definition. So if you go out on claim, you can't do your job and you're not working in a different profession. If you would like to customize that definition or alter that definition, we need to purchase an additional cost rider. These are optional, but I wanted to illustrate them for you. So the base coverage is the $5,200 per month, and this is based on someone that makes $100,000 per year. So that's 62% of their income covered. And this coverage typically costs 1 to 3% of your income to cover up to 60%. So that was the job A or job B, where it was approximately $2,000 based on someone that was making $100,000. Now I'm going to get into the optional riders. This is where we get into the details that can become confusing. But first, I want to highlight the ones that have an additional cost. So residual disability and recovery. If this is on a policy, it's the most claimed rider. And so you can compare the pricing that the total annual cost just for the basic coverage is $2,437 per year before discounts. If you add residual and recovery, that would be in addition to. So you'd add that to the base cost. Residual will pay during partial disabilities. The easiest way to talk about this is if you had a disability that kept you from work 50% of the time, said differently, decreased your income by 50%. The residual rider would pay you 50% of your benefit while you're working in a limited capacity. Without that rider, you have to be not working at all to get a benefit. So this allows people to transition into a disability or out of a disability. Out of a disability is recovery. Let's say you're out on full claim and you want to return to work, but you can't get back to your pre-disability earnings, but you can get a portion of it. While you're returning to work, the recovery will also pay you a benefit. And the value of that is you don't have to wait until you're back to full capacity before you return from the disability. So it allows people to transition to and from disabilities. Next is the capital sum benefit. If you qualify for this, there's a little fine print there, but if you qualify for it based on certain disabilities, the policy will actually pay you a one-time benefit of your total annual benefit once, and then continue to pay your monthly benefits after that. That's a pretty low cost rider because that's just a one-time thing, whereas residual could end up paying you for decades. Catastrophic is easiest to think about like long-term care insurance. Long-term care insurance is when you need assisted living or home health care or nursing home care. If you had a disability that resulted in that, and you cannot perform 2 of the 6 activities of daily living, so you basically need help with your daily routine, this rider would pay you an additional amount on top of your base benefit. So in this example, an additional $3,135 on top of the $5,200 per month, and you can see the cost there. You can also add a death benefit, which will pay a small death benefit if you pass away related to a disability. And then also the supplemental health benefit, if you qualify for that, based on certain claims, it would pay you half of an annual amount or equal to 6 months at one time. The ability to adjust your benefit amount and increase it over time doesn't cost you anything. So the annual increase and the maximize your benefit riders are at no cost. And that's where you can increase your benefit as your income increases without any medical underwriting needed. So then we get into the discount. So this is not specific to PICA, but it is the PICA discount. An association discount of 10% comes off the total premiums. So for this fictitious person, the total cost would be $2,780. And that would be 2.78% of this person's income. That's the base benefit plus the additional cost riders, which fits within my quote of it will cost 1 to 3% of your income to insure up to 60% of your income. And then this just shows that the benefits are non-taxable. So that means that they're received tax-free. With that said, your premiums are paid with after-tax dollars. So if you purchase disability insurance, just like your life insurance, you cannot take a tax deduction for the premiums you pay, but that's important because by not taking a tax deduction, it allows the benefits to be tax-free if they're received. And this just shows this example, the 2.78% was based on 100,000 of income. I do want to mention that with these policies, you can go on and off claim an unlimited amount of times. And so if you have residual in recovery or not, if you get sick or hurt, you return to work, and then you have the same recurring disability or a new disability and go back on claim, you can do that an unlimited number of times. When we talk about customization, what can you customize? So when I talk with someone about this, I ask them what their current income is, what their occupation is, what state they live in, what's their date of birth, easy questions. And then we start to talk about how much of your income do you want to insure? And then I run a quote for how much does that cost? And we look at the different elimination periods and benefit periods. From an affordability standpoint, the 90-day elimination with benefits payable to age 65, I'll say is the sweet spot for premiums. You can have a longer or shorter elimination period or benefit period, and I can show quotes for all of that. Some people say I'll self-insure for 180 days. That would decrease the premium. Some people say I'd like my benefits payable to age 67 or 70. That would increase the premiums. I do want to switch over to the male illustration, but while they're apples to apples, except the pricing is different. But any questions, comments based on this?
There were a few comments in the chat.
Okay.
Matt asked, "Hi Ryan, can you share what, if any, financial interest you have in the product?"
Absolutely. So with disability insurance, as an insurance agent, I receive a commission, which is predetermined by the insurance company, and it is built into the cost of the premium. So it does not mark up your premiums. And the way that disability insurance carriers offer commissions is basically to incentivize agents to bring them business. And so what I do is I'm a broker. I work with several carriers, and Principal is a strong carrier, but not the only one that I have access to. All of the carriers I work with pay the same commission, so I'm not incentivized to focus on one more than another, but Principal is offering the association discount, so that's why we're highlighting that today. And so I do have a financial interest. If someone issues their policy and starts paying premiums, I do receive a commission. And that's why I offer complimentary for all of the consulting, not because I'm trying to just get you to purchase something, but I want you to be educated on it to make sure that you're purchasing it because it's the best fit for you and not because I'm just trying to earn a commission. Does that answer your question?
You got a thumbs up.
Okay.
And then Nancy asked, does the rate fluctuate based on the state that you live in?
Yes, it does. So what the underwriters look at is claims history. So they look at male and female, they look at different ages, they look at different occupations, they look at where people live, and they're not biased to offer it to certain people and discriminate against others. They're simply looking at claims history, and part of those claims are related to where you live. And so all of the illustrations I provide are state specific. I'm currently licensed in 26 states. I'm eligible to be licensed in all 50 states. And the 26 that I'm licensed in represents the clients I currently have. But if anyone on the call is outside of those states, I can become licensed in that state and work with you directly, or you could choose to work with an agent of your preference.
Good stuff. And then the third question, and Laura, I might need you to come off mute to clarify this one, but she asked, is the premium a business expense or can it be paid by the corporation on behalf of the consultant?
Great question. I'm glad you brought it up because I forgot to bring it up. So the premiums can be paid by any entity. So your own corporation, corporation you work for, if you're not a consultant anymore, out of your personal checking account, out of your business checking account. There are a few parties to a policy. One is who is the insurer, two is who is the insured, and three, who is the beneficiary, and four, who is the payer. They could, the second, third, and fourth could all be the same, right? It's an individual and you're paying it out of your personal checking account. However, the payer could be your business checking account or your corporation. So I just wanted to let you know that it can be treated as a business expense paid by the corporation or your business account. I just encourage you to not do a tax deduction for the premiums you pay, because if you go on claim, you could be audited for that. And if they show that you wrote off your premiums, then your benefits could become taxable. So again, any bank account can pay for the premiums. I just encourage you to not claim them as a tax deduction. And just to give you another example, if any of you are a W-2 employee of a corporation and they offered a group policy, corporations do write off the premiums for group policies. And that's why the benefits from a group policy are taxable. And so that's a major difference. So if anyone on the call has a spouse, significant other, or partner that has coverage through their employer, it might be good to understand the details of that policy and to point out that the benefits are taxable if you went out on a claim. Any other questions, comments?
Nothing else in the chat. I appreciate that question because I hadn't even thought about that.
Yep. Yeah, and I work with several small business owners, solopreneurs, and many of them pay the premiums out of their business account. They just don't write them off. So here are the male rates, apples to apples, except for male versus female rates. I'm not trying to be insensitive with this conversation. I'm just trying to use the terminology that disability insurance carriers use. So with this one, age 40, gender specific, male, no tobacco or nicotine, 5A occupation, was run in March of this year, and this person also lives in Kansas. Same exact everything, just male rates instead of female rates. So I apologize for hopping back and forth, but just to compare, the female rate base cost was $2,437. Same coverage for a male would be $1,380. Same riders, everything is apples to apples. Total cost before the discounts, doesn't have before the discounts. After the discount, $1,614, apples to apples. So again, with the association discount, it's gender specific rates. So that's why I wanted to show both. I didn't do this to intend to make males happy or females unhappy. This is just the reality of disability insurance. So not a lot to go over on the mail one other than the price difference. Just wanted to illustrate the difference in pricing. And if anybody wants an illustration, it will be specific to your situation. So those were my prepared comments today. I think we did pretty good on time management. I appreciate your attention to this. Again, I'll end the way I started. It's not the most exciting topic, but it's an important one. So with that said, I will stop sharing, open it up for any questions, comments, and if you'd like to connect offline, Stacy does have my contact information. So with that said, thank you, and I welcome your questions.
Thanks so much, Ryan. And people can feel free to just raise your virtual hand or come off of mute and go ahead and ask your question directly. We've had some good questions so far, but I'm sure there could be some others that you're wondering, and know that others may have the same question you have.
Yeah, and also I completely appreciate and respect that this topic and financial planning are personal topics, and you might not be comfortable asking a question in front of the group. So if you just want to send me an email with a general question, but don't plan on continuing the process, that's fine too. I just recognize this might not be the best forum for personal questions. And I saw a thank you in the chat, and I will say you're welcome.
Any questions? I know this has been super informative. I spoke to Ryan directly before he held this session, and it was a great education just to learn what's involved with something that we don't always think about.
I have
Matt.
a question for you, Ryan.
Yeah, absolutely.
So I don't know if it's good news or bad news, but I just turned 60.
Okay.
So if I'm going to go into the consulting space and having your thresholds of 65, 67, and 70, if we're looking even at a, anywhere from a 5 to 10 or 12, 10-year period, is this even worth it? Or should you just self-fund out of retirement and other things?
So the way I'll answer that is that it might be worth it, because even though your benefit period might be listed the same as someone younger than yourself to age 65, 67, or 70, the insurance carrier and the underwriter know that for your specific situation, they're only going to insure you for a maximum of 5 to 10 years. So your premiums will not be significantly higher than someone younger than you, because someone younger than you has a longer possible benefit period. So I do work with individuals around and at your current age, and some of them do decide to proceed with coverage. And I would say that the premiums for yourself probably are not as high as you think they might be, as compared to life insurance,
Right.
Where life insurance, the older you are, the more expensive it is no matter what. Disability insurance is not the opposite, but it doesn't have the same effect for older applicants.
Perfect. Thank you.
Yep, you're welcome.
Hey, Ryan. Thanks for answering my question earlier. I have a question about, I remember when I, applied for a mortgage, and I remember when I applied for life insurance, and being a independent contractor, independent consultant, there's often questions about like, how long have you been doing this specific thing? Like, what's your work history? How many years do you advise that people, I guess, does it matter that you're an independent contractor versus W-2, and like how many years of work history do they look for to base the coverage on, or is that like, how is that included in the underwriting?
Yeah, so there's not a requirement. Everyone's eligible for some level of benefit. And as I mentioned, there are the business owner allowances, and also they are willing to consider previous income from recent years. I'll let you know that ideally, the underwriters would like to see 3 years of income history. And notice I didn't say from your current occupation or consulting, but just 3 years. They'd like to know how much you expect to make this year, and then what did you make last year and the year before to show that earnings history. So ideally you have 3 years. So someone coming right out of college with no earning history, it's not a great fit, but someone later in their career that's switching careers or starting a business can be eligible for coverage, even if they don't have a long track record from that organization.
Thanks.
Actually, Ryan, a second question based off of that. So obviously your income can change significantly, especially if you're in a, Fortune 50 company going out and becoming an independent contractor. So as your income rates change, does the disability payout stay at that higher rate? Let's say that you've got it based off of your past 3 years worth of income, which is really based off of your Fortune 50 work. So that's going to be a pretty significant income. It would set your rate, it would set your premiums. But then you go now into the independent space, and potentially your revenue could be less, but would it pay out disability wise at the higher rate?
Great question. I'll answer it in two ways. The first way I'll answer it is that state insurance commissioners do not allow insurance companies to charge premiums for any type of insurance if they're not willing to pay the benefit. So if you're paying the premiums based on a certain benefit amount, that's what the insurance company owes you. The second way I'll answer it is if you're coming out of Fortune 50 type income and you're heading into consulting, they will factor in your previous income, but that will not be the only determinant for your qualification. They're also going to look at what does your future income look like. So as I mentioned in my previous answer, they will factor it in, but there's no guarantee that whatever your income was last year or the year before is the cover, just factor it in. So those are the two ways I'll answer your question. I have that come up a lot. I have clients who have owned a policy for 1, 3, 5, 10 years, and their income has changed since they applied and issued that coverage. And so if their income goes up, the policy will only be proportional to that if you exercised those riders I mentioned, maximize my benefit and benefit increase, and that would result in an increased premium proportional to how much you increased your benefit. I've also had clients where their income goes down since the policy was issued. And that's where the first way I answer your question applies, that proactively, maybe that applicant should have told the insurance company, hey, my income went down, I should probably reduce my benefit and reduce my premiums. But if they didn't, and they go out on disability, they get the benefit they're paying for. Because as I mentioned, the insurance company can't charge premiums for a benefit they're not willing to pay. Great questions. Please keep them coming.
We've got a few more minutes. What other questions do you guys have?
Yeah, and these recent questions are excellent. And I'll just let you know, everything is customized. So when you apply for coverage, if you just want an illustration, it's based off of your situation. So how long have you been in business? What was your previous occupation? What's your current occupation? What's your age? What state do you live in? And so if everyone on the call followed up with me afterward, you would all receive a different proposal and a different approval based on your income and your specific situation.
Is there any benefit to applying with a partner or spouse?
There's not. So with disability insurance, the discounts can be through an association or when you have multiple people apply that have the same employer with W-2 wages. There are not discounts available for partners or spouses or significant others. So there's not a direct financial benefit. No. I will mention that if someone wanted to apply for life and disability insurance at the same time, you could complete one set of underwriting requirements and be approved for both policies at the same time. And then also just really want to highlight that PICA discount, that's wonderful that it's available. And I just want to remind you that once you have it, you can't lose it no matter what. You just need to be a PICA member at the time that you apply and your policy is issued.
Ryan, does that discount apply to life insurance as well, or just for the disability insurance that we're talking
Just
about
the
today?
disability. Yep. So that discount is actually specific to PICA from Principal Disability Insurance.
Okay.
And I'm the approved vendor to offer that discount.
Got it.
So my goal today was to highlight the discount, which is only available through Principal, but also educate you on the coverage in general, because there are several disability insurance carriers. Principal is not the only one. You have zero obligation to work with Principal, zero obligation to work with me. But if you want that discount, that is where the obligation to work with me in principle comes in, but it's your choice on whether or not that discount's important to you.
Good stuff. Well, are there any other last questions before we wrap up?
I saw a thank you, and again, you're welcome.
Okay. Well, if there are no other questions, I am going to share screen. Ryan, thank you so much for the education today on disability insurance. It's something probably many people do not think about. I did not myself until the last couple of years, and just for me, as I get older, it's super important. So today, many of you on the call are PICA members, but some of you are not. And if you enjoyed today's sessions and sessions such as this targeted to independent consultants, I encourage you to join PICA. You can get an all access pass to everything PICA offers for $395 for 1 year. It allows you to participate in online workshops on topics such as business development, narrowing your niche, optimizing your LinkedIn profile. There are also virtual roundtable sessions. In fact, tomorrow there's one that's being held on emotional intelligence if you're interested. You can also get coaching and advice. Liz, who was at the very beginning of this session, our founder and chief advocate, she offers office hours where you can get specific advice for your business. You can also get tips and tools and templates in PICA's knowledge base online, and meet a great set of fellow independent consultants. Sometimes you might feel alone in this journey, and it's great to meet other people who are on the same path as you as an independent consultant. So again, thank you all for attending today, and thank you, Ryan, for being our guest speaker today. This session has been recorded, and we will send out a link to this recording as well as slides that include Ryan's contact information as well. Thanks so much, everybody.
Thank you.